Hey, what's going on, everybody? My name is Zach Pasquarello, and I had a trucking company for the past 2 years, and primarily I am a bookkeeper and accountant. So I do QuickBooks consultations, I do full service bookkeeping, and I do taxes for about 30 small businesses. I service a lot of trucking companies, but I also do real estate investors, restaurants, software companies, advertising agencies. I do a large variety of bookkeeping for different companies. In this video, I want to talk about a couple things that I see a lot of people do incorrectly, specifically with like their bookkeeping and their taxes and just generally with their business. And all of these are going to be specifically related to trucking companies, but even if you don't have a trucking company, some of these tips and tricks will still be applicable to your business. Okay, so I want to talk about acquiring assets. So what does that look like on your books, whether it's an asset or a liability or both, even if you're leasing particular equipment? And then also putting your personal money into your business. So owner's investment, this typically happens in the very beginning before you even have a business checking account. How do we account for that? Can I still write that off? Is that still a tax deduction? And then whenever you're just starting a business, timing is really important, especially whenever you have to buy an expensive piece of equipment like a truck. So I'm going to talk about the perfect time to do that and then how to do that, whether you're spending cash or getting a loan. And then finally, the fourth thing I want to talk about, super specific to trucks, specifically CDL trucking, is how to file your IFTA taxes. So IFTA taxes are due every quarter, so it's January right now. So your quarter 4 2022 IFTA taxes are due, and I briefly want to touch on how to do that. Okay, so the first thing I want to talk about is buying a truck. This will probably happen in the beginning of your business, or if you're lucky, you're going to get a second and third truck after you've established your business. And even if you don't have a trucking company, any business might acquire a particular asset. So if you are a real estate investor, you're obviously acquiring real estate, houses, or if you are like a general contractor and you might be acquiring some sort of piece of equipment, or if you're a manufacturer, maybe you have some expensive machinery in your manufacturing plant. Whatever your business is, you're probably going to acquire assets at some time. So I want to talk about that real quick. And this actually applies also if you are doing a lease to own. So lease to own, that happens a lot with vehicles. Lease to own should be accounted for the same way as purchasing outright. So you want to add the asset on your books. I see all the time people will make their monthly payment for their loan and they'll just categorize that as an expense in real time. And that is not the correct way to do it. So I actually have a QuickBooks course for trucking business owners, and I'll link the QuickBooks course in the description below. I talk about this in a little bit more detail in the course, but I want to talk about it real quick right now. So as soon as you buy a truck, you're obviously going to have a bill of sale. And then more than likely, you're not going to use straight up cash to buy the truck. You're probably going to take out a loan to buy that truck. So you want to keep your bill of sale and you want to keep your loan origination document. So whenever it's time to do your bookkeeping or your taxes, you have that information. So whatever the amount of the truck on the bill of sale, that's going to be the asset. And then whatever the loan origination document says is the original amount of the loan, that's going to be your liability, your long-term liability on your books. So you're going to add an asset and you're going to add a liability on your books. And then more than likely, there's probably going to be some difference between the asset and the loan because you probably will have paid a down payment. So whatever that down payment is, add that to the liability. So if you spent $50,000 on a truck and you paid a $10,000 down payment, you're going to have a $50,000 asset of the truck, and then you're going to spend $10,000 of your cash, and then you're probably going to have a $40,000 loan. So $40,000 loan plus the $10,000 down payment on the truck equals the total value of the truck at $50,000. Now you're going to want to do two things on a monthly basis whenever you're accounting for these assets. First, you want to capture depreciation. A lot of vehicles depreciate over 5 years, but tractors like CDL trucks, they depreciate over 3 years. Trailers depreciate over 5 years, just like vehicles. So you want to take the purchase price of the vehicle. So for this example, the truck that cost $50,000, divide that by 5, and that is your annual depreciation. So every year you will take a depreciation expense of $10,000 for that truck. And then you have the loan payments. So like I said in the beginning, a lot of people take those loan payments, like, maybe you're spending $1,000 a month on your $40,000 loan, and they just say that is their vehicle expense. But that's not the correct way to do it. So you take depreciation of the truck, and then you pay off your loan. So that $1,000 goes towards your loan, and then the final step is you need to split the interest and the principal on the loan. So you're paying $1,000 every month, maybe, just to keep it simple, $800 is going towards the actual loan, and then $200 is going towards interest. So that interest expense and your depreciation expense is how you get the tax deduction, is how you write off the purchase price of the truck and also the money you're paying back to your loan. The total $1,000 in and of itself is not a business deduction. It's not a tax write-off. You're just paying back your loan. The depreciation and the interest are your deduction. Those are your expenses. Okay, next I want to talk about putting your personal money into your business. So I see a lot of people, whenever they start up, they might spend maybe $100 on a consultation to talk to a bookkeeper or an accountant or an attorney. Or you might just be buying job supplies. Maybe you got a DAT load board subscription. Maybe you paid for your BOC3 and your UCR with your personal money. Maybe you got a pallet jack. Whatever. There's a million different things that you could potentially purchase in the beginning of your business, in the startup stages, and you might be using your personal money before you get a business checking account, which is totally cool. Like, that's totally acceptable, and that is a legitimate business expense. As long as what you're buying is necessary and ordinary for your business, it's totally allowable to write that off. You just need to keep track of it. So if you, let's just say you spend, $10,000 of your personal money on your business, that would be considered owner's investment. And then you can also capture that as an expense. So what I see a lot of times happen is people, like in September or October, they'll start a business and then they won't really make any money. So they're like, oh, I don't need to file any taxes because I didn't make any money. But in reality, you spent thousands of dollars. So you still want to file your taxes as soon as you start doing things with your business. Like, as soon as you start spending money, file your taxes. Even if you only spent $1,000 in December, you can still capture that loss, that $1,000 loss, and that'll offset your income in the future. So owner's investment in the beginning of your business, perfectly legitimate business expense. Make sure you file your taxes even if you don't make any money. Okay, the third thing I want to talk about is whenever you're starting a business, you want to wait until a good time to buy your truck. So I know you might end up waiting forever for the perfect time. You're never going to find the perfect time, but you want to find a good time to start your business. And typically what I see, if you're starting like a box truck business or if you're an owner operator with a tractor trailer, about $10,000 seems to be like that good sweet spot amount of money to start your business. And for this particular example, all trucking businesses are going to start with getting a truck. It's really important that you save your cash, because during your first year of business, you are probably, unless you buy a brand new truck, and even if you buy a brand new truck, you're going to have a lot of expenses. You're going to have a lot of out-of-pocket expenses. If you're a real estate investor, you're probably going to have to repair your house. Like, you don't want to spend your last dollar just to get the truck. You don't want to spend your last dollar on your first property. If you're starting like an online coaching business, you don't want to spend your last dollar on that online coaching course to learn how to be an online coach. Like, you want to start your business with a decent amount of cash readily available. So that's why it's really important to try to get a loan for your truck. Try to get a good interest rate. Anything less than 8% in today's market is probably going to be a decent interest rate. I've seen some loans as low as like 3 or 4% on a truck. If your credit score is decent and if you have good history, you might be able to get something, 4 or 5%, but anything less than 8% is a perfectly good loan. Try not to spend, even if you have $20,000 in your bank, try not to spend straight up cash when acquiring assets. Always leverage credit, because you want to save your cash, because you don't want to rack up a massive credit card bill, because credit card interest, I promise you, will be more than 8%. So try to get a loan to acquire your assets, save your cash. Also, along those lines, look into business credit cards. If your credit score is decent, like above 700, you will probably be able to qualify for a pretty good business credit card. That's what I did for the first 2 years of my trucking business. I got an American Express credit card, and it had 0% interest for the first 12 months. So I got like an $8,000 credit limit. So you can basically use that as like a free $8,000 line of credit, 0% interest for the first year. Just make sure you have enough money to pay that off at the end of the 12 months, because if you don't, the credit card company will charge you interest accrued for the past 12 months. But if you are able to manage your finances appropriately, then that might be a good option for you, because insurance is expensive, fuel is expensive, and repairs are expensive. So if you can get $8,000, 0% interest, that might help kind of float your business along for the first year or two. And then the second year I did it again. I got a Chase credit card. I paid off my American Express credit card, and I got another $8,000 credit limit on a Chase credit card And so I just did that for the second year, got another $8,000 basically for free, and then I paid it off a year later. Okay, the last thing I want to talk about is how to file your IFTA. I know there's a lot of accounting firms and a lot of trucking consultation advisory services that offer to file your IFTA for you. You really don't need to pay anybody to file your IFTA. I promise you it's super simple. You only need two things. You need the miles you drove and the gallons you pumped. And you can get both things probably from either your ELD or your fuel card. That's why it's really important to, first of all, definitely use an ELD, because you need to use an ELD per DOT compliance. And as long as you're using your ELD everywhere you drive, like I know for GoMotive, there's like a little tab on the left-hand side whenever I log in on my computer. It says fuel, you can go to compliance, you can go, and there's literally a tab that says IFTA. Like I click on IFTA and I go October 1st through December 31st, and I can look at all of the miles. You just need to know what miles you drove in what state. I promise you, if you have a legitimate ELD, guarantee you can get that information straight from your ELD. Everyone's different, so I don't know, if you don't have GoMotive, I don't know exactly how you do it, but I promise you, just log into your online portal with your ELD, and I guarantee you can get how many miles you drove in which state. So you just need to do it on a quarterly basis. So it's January right now, so you need to file IFTA for quarter 4, October, November, and December. So just get the miles you drove in each state, get that from your ELD. And then that's why it's important for your fuel card. I know like some people use a bunch of different fuel cards. That can get kind of complicated. Like if you're using 3 or 4 different fuel cards, some fuel cards might offer like a really good rate at Love's or TA or Petro or Flying J. People might be chasing those discounts just to get that extra 30 cents off per gallon, and that's great. But keep in mind, like I see this a lot with people that have multiple credit cards, multiple checking accounts, multiple fuel cards. It just makes everything a little bit more complicated. So make sure you're really chasing a discount and that it's worth it. Because if you have multiple cards, bookkeeping is going to be more complicated. You might miss payments, you might pay interest, pay late fees on missed payments. You're getting in all these statements, you got to manage all these cards. Like it does definitely make things more complicated. So if naturally you're an unorganized person, might not want to have 5 or 6 different credit cards and 3 or 4 different fuel cards and 3 different checking accounts. Just keep it simple. 1 checking account, 1 or 2 credit cards, 1 fuel card. That way, whenever it's time to file your IFTA, you just log into your fuel card and you can pull up a report, and your fuel card will tell you everywhere that you pumped diesel for the past 3 months. And then you can just export it to an Excel file, throw in a quick pivot table, and sort by state. So you can just say like all the gallons I pumped in Pennsylvania, all the gallons I pumped in Texas, all the gallons I pumped in Illinois. And then you go to your the final step. Once you have the miles pumped in the miles driven in every state and the gallons pumped in every state, you go to your Department of Revenue website. This is probably the most complicated step. But if you're like me, I had a representative from the Pennsylvania Department of Revenue literally reach out to me and call me and be like, hey, I see you just got an IFTA license and account. Do you need any help setting up your online portal to file your IFTA? And I'm relatively computer savvy, so I didn't need help. But I could see if it's your first time, it might be a little bit complicated, but I'm sure whatever state you live in probably has some type of brochure or online account. So whenever you filed for your IFTA license or your IFTA account, there's probably some instruction manual that comes along with that filing and explains how to log into your account. So once you have your miles, once you have your gallons, once you know how to log into your online portal for your Department of Revenue for your IFTA filing, that's it. All you do is it's probably just like answer a couple questions, enter in your numbers, and then you hit submit. It's usually like $100 to $300 per quarter, per truck, depending on where you pump and where you drive. But with all that being said, don't pay somebody hundreds of dollars to file IFTA for you. It's really not that complicated. You can probably do it yourself.